Welcome to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. I'm Emeka, your host, and this podcast is all about real estate, investing in real estate. I invest in multifamily, and I'm here to show you that regular people can invest in real estate. You don't need to have billions or millions. It's regular people like you and I who can invest in real estate today. So, on this podcast, you'll hear from myself, as well as I'll bring different real estate professionals on from around the world to talk about their investing journey, strategies, market insights, or how they got into real estate so you can get started today as well. Stay ready, my friends. Hope you enjoy. Nico, my man. So tell the world, number one, who you are, what you do, and then number two, is it a good time to buy in multifamily right now?
My man Emeka. So this is me, Nico Salgado, your partner, your friend, your partner in crime, rather. And I am a multifamily investor for 5+ years now, a school teacher for 21 years, a surf coach for 15 years, and a waiter, and so many other things. And a family man, a father of three now, and a happy dude. So is it a good time to buy, Emeka? Absolutely. This is my exciting moment of the 5 year journey that I've had. I think today is the best buying opportunity that I have seen and that many of us have seen in the past 3 to 5 years.
Okay, so obviously, you and I look at the news, we read what's going on, we follow economists. We're in a great network of people who know multifamily, but the news is making multifamily seem very scary. So of course, when things are scary, that's when you buy because everyone thinks that multifamily is bad. But why do you think it's a good time and why are you ignoring the news?
So if we look at the prices, just from a price point, we are down 20 to 40% in pricing from where we were 3 years ago at the peak of the market. And if we can get a property today at a discounted price point, as long as it is cash flowing, we are in a great position for when the market shifts. And market cycles are real. They're anywhere from 5 to 10 to 15 years at the longest, but typically a 7 year cycle is what we can expect. And if we are in a down cycle or where the pricing is cheaper today than it was 3 years ago by 20 to 40%, it is an excellent opportunity to purchase today. Again, back to the point of we have to be cash flowing. If you can purchase a property today with a minimal amount of cash flow, 4% to 5% or so, you're in an excellent position to ride out any storms and then be in a better position when the market turns around and it's at its peak again in a maximum of 7 years from today.
Okay, so we do know that there's cycles. We know what goes up goes down, what goes down goes up. I mean, if you just look at the past 100 years, generally speaking, that happens. But if you look at where the graph goes, it's always up. But how do we know that these aren't, it's just not correcting itself? Because COVID was something that we really haven't seen before. Low interest rates, everyone got in. But what if, the pricing is just coming down to where it's supposed to be? And that's going to be average. Are you scared about that, or do you still have faith that it's going to go up gradually?
I have faith that it's going to go up gradually. Now, let's take a look at a little bit more of what you were saying. The rents were crazy. They went crazy for 2 or 3 years, right? And and now we're seeing flat rent growth to some negative rent growth in the nation. And then obviously it's market specific. And in our particular market, we are pushing rents, yes, but it's kind of flat. So let's imagine the next few years are flat and it's supposed to be anywhere from 2 to 3% growth year over year. Let's say 3 years of flatness is 9%, right? So then we would be back to level if that's the thought process that kind of we're kind of resetting the market and resetting expectations for renting, etc. Now, we also have to look at where people are moving because that's a huge factor in whether or not rents are going to go up. And if people are consistently moving to a market that we are investing in, then and the rents are still flat, at some point those rents are going to need to go up because it's just a supply and demand issue. All that being said, if we are in the right market where rents are going up and we see rent increases at some point, whether that's now or a couple of years from now, and we are in a position to purchase at a expanded or a higher cap rate, meaning a lower price point, At some point, though, the buyer's appetite will come back, because right now the buyer's appetite is weak, and the sellers are still kind of, waiting for people to purchase their properties, or still trying to offload properties that are not performing. If the buyer's appetite comes back and the rent increases begin to happen again, then we are in an excellent position for decompressing cap rates, where people are willing to spend more money on the properties. And if we couple that with the fact that maybe rates will come down a little bit, maybe half a point or half a 50 basis points over the next year, we could be in a very good spot within a year to 2 or 3 years to sell, if that's what we're looking to do, to exit.
No, beautiful. And of course, we are in Central Florida. It's great. It's a great area. I like Central Florida a lot because of the higher barriers to entry. Brokers won't give you any time unless, you have at least, some proof, some rapport. But there is also a lot of supply here, even though things have slowed down. Multifamily, well, starts, I can't say it's been the greatest now, but, people are already in the middle of builds. Does that scare you at all, or is that just kind of adjust how and where you look at?
That does scare me, Emeka. Thanks for bringing that up. So, if we have an oversupply, it's just going to take time, as long as we have people moving into the location, moving into that specific market. It's going to take time for those units to get absorbed, right? And if we have consistent building going on, then we are always competing against that. And what you and I have figured out is that, well, we're competing with our C minus or C class properties. We're competing against A class properties that are dropping their rents and increasing their concessions just to get vacancy down and occupancy up. So we're competing against with that right now. That's why our rents are flat. That's what makes it challenging to increase rents. However, we are still beating the market average of, we're over 90% occupied, and we're still able to push rents, especially on lease renewals. But it's just so much more challenging, and there's a lot more work that goes into leasing today than it did a few years ago, because again, we're competing against those new builds that are coming online today. And like you said, I'm worried about, those new builds that are going to come online a year from now. And you see construction all the time. You're down there, your boots on the ground. You see it happening in real time, that people are still building and still constructing down there.
Yeah, it's really crazy. I really don't get it, but working where I work, it's like, well, a lot of these companies can't really afford to stop. So what do? They just build. Typically, it just takes longer. They, slow the process. But if they have hundreds of employees, that's hundreds of families that they have to take care of. So that's what I'm definitely seeing out here. But at the end of the day, if you look from a macro level, housing, there's still a short of housing, right? So at the end of the day, it will get absorbed. It's just a matter of how quick it would get absorbed. So is that something you ever look at? Basically, multifamily starts, how much housing there's available. When I say housing, I'm not talking about single family. We do know that there's an affordability crisis, but now that the average first time home buyer, I believe the numbers change everywhere depending on where you look, but right now I think it's about 38. What are people doing from the time they leave college at 21 to 38? Do you believe that they're renting? And if so, do you think that's why multifamily will always be a strong asset to have?
Yeah. People talk about a renter nation all the time, and I do believe that most people from those age ranges need to rent. It's really challenging to come out of college, let's say, with college debt, get approved for a mortgage with the highest home prices today than have ever been. It's difficult for them to get approved with a 20% down, 15, 20, 25% down, or even 10% down. It's tough for them to come up with that. That's number one. And then number two, their lifestyle is very different than mine was growing up. They like the freedom of being able to move from market to market. I just actually posted this or talked about this in my podcast, where people today, the younger generations, they would like the flexibility of moving. Maybe they want to live in Florida for a few months, and then maybe they want to live in Tennessee, you know. So they like that opportunity to move around, and that's why they're going to rent. What we're seeing is that if the rent becomes unaffordable for them, well, let's backtrack. It is usually more affordable, and you have to make sure that you're pricing your rents more affordable than owning, right? And we are at that price point for sure. We have affordable rents. But what we have seen is that if people can't afford the rents, they tend to buddy up together or move back home right? And that's kind of what we're seeing today in this day and age, with a higher than wanted, unemployment rate. And maybe wages are also kind of flat these days too. They're not really increasing. And on top of that, there is fear in the market, so people are either staying home, roommating up, or looking to go to a cheaper market. And that's where we are in the cheaper market than the nearby Tampa and Orlando markets. And we are offering people you know a different type of housing. And I'm actually getting, being on the leasing side, I see people coming from St. Pete every day. Even this morning, somebody saying, I'm tired of paying X amount and I'm ready to move back to where I came from in Lakeland, or back to where I came from in Plant City. And I'm getting those messages every single day. People kind of leaving that just can't afford those, you know, I guess, primary markets these days.
You said it's a buyer's market. So there's a lot of people watching this podcast or listening right now who want to get into real estate or multifamily specifically. What are three actionable steps that they can take today in order to get there?
Okay. So one of the it's funny, just before I hopped on this podcast with you, I had a conversation yesterday with a broker, and I was like, I don't want to take this call, but I did it. And you have to do it because it turned out to do two amazing things for me, which I'll share here. Number one, speaking with people and networking got me this opportunity today. He gave me two pocket listings yesterday that I began underwriting. I told him I'll get back with him in 24 hours, and I'm done. And I'm going to respond to him with two pocket listings that are not listed, that have assumable debt. One is at 3.55%, and the other one is 4.11%. I can take over those assets right now at a great price point with that assumable debt, just from the fact that I was networking and willing to speak with brokers that I didn't think was going to bear any fruit. That he gave me that. He also has a potential buyer for the portfolio that I have listed right now as a 1031 exchange. So two things came out of that. And that's number one, is networking is huge. No matter how tired you are, no matter how far along in the game you think you are, you always have to be networking and speaking with people. If you're not speaking with people, you're not in the game. Okay. So number one, network. Number two, underwrite everything. Look at all the deals that you can, underwrite every single deal, because you have to know how things are trading, how things are marketed. You have to understand what's going on in your specific target market to understand what you can offer on your properties when you're going to buy your property. So network, underwrite like mad, and let's say number three, let me think about it. Education. So I always bring these top three things up: networking, underwriting, so you're in the game and knowing what to offer on properties, and education. So education can be a number of things. I listen to podcasts every day. I listen to audiobooks on bettering myself, if like self-improvement, as well as real estate audiobooks. And I also attend meetups. Like last night, I was on the Jake and Gino call just to learn a little bit more. So education, networking, and underwriting. Get it done.
Love it. And with that, we're going to move on to the next segment of the show where I ask everyone the same three questions. You're very familiar, Nico. Question number one: what are the two books you recommend an aspiring investor to read?
Okay. Always. Rich Dad Poor Dad. I hate saying it because everybody says it, but it's so crucial to change and shift your mindset about real estate investing. You need to have that mindset shift of buying something, an asset, a business that is going to provide you with income. Crucial. Rich Dad Poor Dad. And then, I really like Grant Cardone for getting me all pumped up. He's a salesman at heart, but he also does real estate. So he's got a few books out there. And if you listen to any one of his books, he will pump you up, and he ad libs a lot of it when he's doing his audio books. So I love listening to his audio books. So Grant Cardone, any one of his books are epic, and Rich Dad Poor Dad.
What speech or lesson has impacted you in your career?
Can you repeat that?
Has there been a speech or lesson that has impacted you positively in your career?
Yeah. I think that the first time I had a conversation with Joshua Rusin, who's got Multifamily Wealth Nation right now, a great program to get involved with. The first conversation that I had with him, he asked me key and crucial questions. This was in 2019, that kind of helped shift my mind of whether or not I should be involved in this game, and how I can get involved in this game. And he really just He nailed it down to how much discretionary income do I have, and I don't have any. And then he told me the path that I need to take to be successful in this space. And it was from that one conversation that I decided I needed to join his group. And I did. He was with Jake and Gino at the time. Now he's got his own thing, Multifamily Wealth Nation, and he's crushing it.
I love it. Lastly, if you can have dinner with anyone dead or alive, who would it be and why?
Great question. I want to have dinner with Alex Hormozy. He has been extremely influential for me over the past few months, and I listen to everything that he puts out there. And I think he's a wonderful thought leader, and I think he's a wonderful businessman, and he's got his head on straight. Even though he doesn't have kids yet, I think that he will definitely help me out.
Oh, for sure. I love how he makes complex things simple. That's the best thing. All right, Nico, how can people reach out to you? What do you need from the audience? How can we help?
All right, go to my website, smallactscommunities.com, and there you're going to get a bunch of free things. One of them is a credibility kit. If you're struggling with getting any credibility with brokers, you get this free kit with a video along with it and a Canva link, which will share exactly how to create your own credibility kit and email templates and everything you need to know to get involved with reaching out with brokers and getting some credibility today.
All right. Thanks, Nico. Until next time.
You're the man, Emeka. Thanks, brother.
Thanks for tuning in to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. If you enjoyed this podcast today, please give me a like and subscribe, and tune in next week so you can hear another one. If you ever want to reach out to me, I'd love to talk to you about real estate. If you're ever interested in any of the deals that I have, I'm based here in Central Florida, reach out. My information is below. Hope to see you next week. Stay ready, my friend.